The echo of fear. How markets reveal our true vulnerabilities, not bitcoins. We observe a recurring pattern in the grand theater of human action. The emergence of a new shadow, cast by the unknown, which momentarily obscures what was always clear. This week, we turn our gaze to the latest apprehension, the specter of quantum computing, and how it mirrors the anxieties that have come before, revealing not a flaw in the immutable, but a persistent human tendency to project our fears onto the very solutions we seek. You see it, don't you? The market, in its ceaseless dance, often mistakes a new narrative for a new reality. We are told of quantum threats, of algorithms that might unravel the very fabric of our digital security, and suddenly, the bedrock of Bitcoin seems to tremble. Yet, we have witnessed this before. The whispers of climate catastrophe, the pronouncements of energy waste, all aimed at the same target, all designed to sow doubt where certainty had begun to take root. What truly shifts in these moments is not the underlying logic of Bitcoin, but the collective perception, swayed by the winds of uncertainty and the human desire to find a culprit for stagnation. Consider the nature of fear itself. It is not an objective force, but a subjective interpretation of potential loss. When the market hesitates, when prices consolidate, the human mind, ever seeking explanation, grasps for external threats. Quantum computing, with its arcane promise of exponential power, becomes a convenient narrative. It is a complex, distant possibility, easily amplified into an existential dread. We are told that bad actors might crack legacy accounts, perhaps even those of Satoshi. But what does this truly reveal? It reveals a fundamental misunderstanding of Bitcoin's adaptive nature, its open-source resilience, and the continuous, spontaneous coordination of countless minds dedicated to its security. The security of Bitcoin is not a static fortress, but a living, evolving ecosystem. Cryptography, by its very definition, is an ongoing arms race between those who seek to secure and those who seek to exploit. This is not unique to Bitcoin. It is the fundamental condition of all digital security. To suggest that a future technological advancement, however profound, would simply break Bitcoin without a corresponding proactive evolution within its decentralized network is to ignore the very principles of human action that drive its development. Developers, researchers, and miners are not passive observers. They are active participants in a continuous process of adaptation and improvement. The moment a credible quantum threat emerges, the incentive structure within the Bitcoin network ensures that solutions will be sought, developed, and implemented with a speed and efficiency that centralized systems can only dream of. Is it not curious how quickly we forget the lessons of the past? We need only cast our minds back to 2021, when the narrative shifted from the promise of Bitcoin to the perceived peril of its energy consumption. The headlines screamed of environmental devastation, of a digital currency boiling the oceans. This was not a technical debate. It was a moral panic, a social engineering attempt to delegitimize a system that operates outside the traditional levers of control. You remember the pronouncements, the sudden withdrawal of support from influential figures, the fear that Bitcoin was becoming socially unacceptable. But what was truly happening? Bitcoin's proof of work is not a wasteful endeavor. It is the very mechanism by which trust is established in a trustless system. It is the cost of absolute scarcity, the energy expended to secure an immutable ledger. And what did the market eventually reveal? That miners, driven by the relentless logic of economic calculation, naturally seek the cheapest forms of energy, which are increasingly renewable and often strained. The climate panic was not a reflection of Bitcoin's inherent flaw, but a mirror reflecting the anxieties of a world grappling with a truly decentralized, permissionless form of money. It was a testament to the power of narrative, and how easily it can distort perception, even when confronted with empirical data. The industry, in its attempts to assuage these fears, often resorts to familiar, centralized responses. We saw working groups and published stats to demonstrate Bitcoin's renewable energy mix, and now we see similar initiatives for quantum security. While these efforts are well-intentioned, they often miss the deeper point. Bitcoin's resilience does not stem from a committee's recommendations or a corporate security program. It stems from its distributed nature, its open-source transparency, and the collective intelligence of a global network that operates without a single point of failure or control. When we speak of industry stalwarts coming together, we must ask, what is the true source of their authority? In a decentralized system, authority is not granted by position, but earned through contribution and consensus. The solutions to Bitcoin's challenges, whether perceived or real, emerge from the spontaneous order of the market, from the countless individual actions of developers, users, and entrepreneurs, not from top-down directives. The very act of forming a working group to issue recommendations implies a centralized control that fundamentally contradicts Bitcoin's ethos. We are told that these efforts will help alleviate near-term concerns. But true security, like true freedom, is not a temporary state. It is a continuous process, a constant vigilance. To focus solely on near-term concerns is to miss the timeless nature of Bitcoin's value proposition. Its strength lies not in its ability to fend off the latest headline, but in its fundamental design as sound money, resistant to censorship, inflation, and the arbitrary whims of any single entity. Consider the geopolitical risks that ripple across the globe, the sudden outflows, the flight to safety. In these moments, liquidity often means heading for the exits, seeking refuge in assets that can be moved without permission, without the scrutiny of intermediaries. This is where Bitcoin's true utility shines brightest. It is not merely a speculative asset, it is a tool for individual sovereignty, a means of preserving value when traditional systems falter. The builders, as the article notes, remain unfazed. Why? Because they understand that the fundamental need for sound money, for a truly independent store of value, transcends the transient narratives of fear. And what of the other digital tokens, the altcoins, the projects that promise innovation beyond Bitcoin? They, too, face their own unique challenges, their own fundamental valuation resets. We see protocols like Aava experiencing a decoupling, where market sentiment heavily discounts their earnings power, pricing and execution risk, and high-profile exits. This is the inherent fragility of projects built on different foundations, often with more centralized control, more reliance on specific teams. They are subject to the same human actions, the same market psychology, but without the immutable decentralized bedrock that gives Bitcoin its unique resilience. If it's not Bitcoin, it's informed criticism whenever possible. The market, in its infinite wisdom, is always speaking. It tells us not just about prices, but about human psychology, about the interplay of fear and greed, of certainty and doubt. The quantum threat, like the climate panic before it, is another test, another opportunity for the market to reveal who truly understands the principles of sound money and decentralized coordination, and who is merely chasing the latest narrative. Perhaps the true threat is not quantum computing, but our own tendency to seek external validation, to allow fleeting anxieties to overshadow enduring truth. What if the very act of questioning Bitcoin security, again and again, only serves to reinforce its unparalleled resilience? We are block-sonic. We don't predict the market. We read its memory. Never forget, Bitcoin is only yours in your cold wallet.